everyone. John Savarino here, your host, Talking Money. Today, we've got a special clip for you. I actually had the privilege of joining Money Mitch on Benzinga TV yesterday afternoon, talking stocks, talking some outlook. So we wanted to share that clip with you. Sure hope you enjoy it.
Yes, that's what it's all about here at Benzinga. We're going to get into it, continue here on stock market movers, but really this show is all about the headlines. And one other thing is our two experts that we try to bring on to you guys every single day because, you guys get enough of my outlook, but I want to go to the experts to keep you guys in the informational edge. Like always, guys, this isn't investment advice, just for educational purposes only, but that doesn't mean that we're not going to get to the good stuff. So let's go ahead. Let's bring on John Savarino here. Welcome to the show.
Money Mitch, appreciate that. I feel privileged to be here and looking sharp, man. I see you dressed up for us today.
You see me? I'm rocking a little extra here. Normally, I'm more of a t-shirt kind of guy. I mean,
I noticed.
I like to stick to my retail traders out there, but at the same time, I can clean up.
Amen. I didn't know if I was going to wear the jacket or not, but I seen that, so it was a no-brainer.
Hey, love it. Looking good. Let's get into it. This is the investment advisor representative of Rooted Wealth Partners. I'm excited to dive on in. One of the things that I will give you guys is check out on YouTube, Talking Money. If you guys want to catch John, I did catch your how to pick stocks. And I think it was interesting, because we're getting this question consistently. And then on here, we talk a lot of kind of more, micro catalysts and stocks. And I don't shy away, as you guys see, talking about AMC and GME. But one of the things that you mentioned here is long-term buys is looking at it kind of in the Warren Buffett approach in stocks and companies that you use. Talk about this and what kind of companies maybe that you use that we should maybe take a look at.
I think, it's a great question, obviously just a fun video because I think over the last couple of years, trading as a whole has become really prominent in the media and social media, for example, but it's really difficult. And I think when you have a really long time horizon, just buying companies, like I think you know this from my video, it sounds cliche, but Apple's my favorite company and favorite share to own out there. But I'm on a Mac computer. I have an iPhone. I think from a fundamental perspective, they're a really good company. So it's an easy buy for me. And you get a little pride, in owning, shares of the companies that you're giving back to or that you're using. And I think even like on the consumer level, it was interesting to hear Mike's, take on Target. But Target, for example, like I swear everyone just loves Target so much. What a great company to own in your portfolio, for example, using that Buffett strategy. But definitely just a fun video because a lot of folks, tend to overthink or overcomplicate long-term investing.
Yeah, I have a friend that we host a show, Pre-Market Prep. We got to get you on there too. And on Pre-Market Prep, Joel says KISS a lot, right? Keep it simple, stupid. You know what I mean?
Amen.
Yeah, definitely. Sometimes you overcomplicate things, and I love that approach of looking at companies you use. We talk about often the thing behind the thing, also. So that's an interesting trade too. Is not only what you use, but maybe what's behind the company that what you use there. But let's go ahead. Let's look at some themes. I'm thinking long term here. Nothing short term because we still got to get around this whole kind of market environment. But what do you like out there? Do you like maybe EV in the future? Do you like more infrastructure picks in the future coming up? Is there any theme that you're looking at?
I think EV, if you have a really long time horizon and, you're a patient investor, I believe, right? My opinion is that will play out quite well, especially if you take a really broad exposure, a broad approach to EV. But I think those that are looking for just a really short-term, gain on EV, I think you're lying to yourself or you're kidding yourself. I think there's a lot more to it still to come when it comes to EV. I think, there's a few companies that are on my radar very long term, or at least over the next several years. I think one that's going to surprise maybe a lot of folks is like Take-Two Interactive. That's something that I've been watching closely for the last year. And really, I started dollar cost averaging over the last few months. I really like the fundamentals behind them. I'm not sure what the charts look short term or long term or anything of that nature, but I think one really fun component to take too is when they release their notes for the next year, the next fiscal year. They earmarked a hefty budget, like a 10 times multiple marketing budget for I think Q2 or Q3 of 2023. And I think a lot of us know like Grand Theft Auto, that video game series, and they've kind of announced that that's in the works. And I think that's going to propel that stock for at least a few years. So that's one of my favorites. I think from like a value, even like an industrial type play, still love John Deere, love Caterpillar. I think we've seen, some sell off over the last 3 months, which once again, if you're dollar cost averaging, you should be really excited about that. And even like financials, I think those, I'd be picky with financials, but love Bank of America. I think SoFi is a massive sleeper in that fintech financial kind of realm, in my opinion.
Yeah, honestly, and we did get comments in the chat. So, what would be like a long-term horizon if you're looking at these types of play? Are we talking 5, 10 years?
Yeah, I
Probably,
would consider 10 years a long time horizon, 10 plus years. Let me clarify that.
Perfect. I mean, a lot of us are in this probably mode right now. I mean, there's a lot of investors that came in with the 2020 movement, and we're all looking towards how do we attack, of course, retirement, right? And so if you have that kind of outlook and you're looking, 10, 20 years down the line, that's what I also consider kind of that long term. Let's go towards the next question here. So we've seen more and more of growth at a reasonable price, GARP plays being mentioned. Is there any that you like out right now?
That's a great question. I mean, I think there's a lot of growth opportunities out there right now to be buying. I think a lot of it's got quite slaughtered, year to date for the most part. Actually, so there's our portfolio strategist, Jackson. He's on our team, and he handles a lot of the advisory strategy work. And he has this theory of these pandemic stocks that became prominent, such as Zoom, DocuSign. Those companies had been around for a long time, but those have gotten really beaten hard recently or over the last several months. And I think some of those companies, according to his theory, they'll hold strong, moving forward. So I think those are some good growth companies to be looking at. But I think, mega cap stocks in the tech industry or the tech sector, like there's, once again, going back to like my dollar cost average comment, like those are really good deals at this point, in my opinion.
No, definitely. It's something to keep on watch. I think as we keep watching, the markets coming down, earnings kind of coming down also, I think it's something to keep watch some of these GARP plays because, I mean, let's just be honest. I mean, we all want some kind of growth in our portfolio, but it just hasn't been that kind of year for growth. What do you need to see for confidence that we, either are having our capitulation moment or that we've actually had kind of a bottom put into the overall market?
Well, I don't think we're there yet. Unfortunately, I wish I would sit. I agree with kind of your comments and Mike's comments earlier. I think it's too early to quite say that we're in the recession, but I mean, if Q2 data comes out and we're negative, I think it becomes, quite obvious at that point. I mean, I think inflationary data, I mean, inflation has to come down to have any type of positive sentiment, moving forward. I think, the stock market as a whole is a leading indicator, of our economy. So it'll be hard to, in essence, identify that bottom because of it. But I would not be surprised if we're not that far away. We're not that far away from it.
Well, you guys heard it here. John Savarino, the investment advisor representative of Rooted Wealth Partners. And please, guys, do me the favor, reach out to him, give him a follow on Twitter. That's just at your name, right?
Easy
right?
enough.
Easy enough, right? Let's keep it simple. All right, guys, you guys check him out and definitely check out Talking Money on YouTube if you guys want to get some of these quick wrap ups. I like that they're quick too because I enjoyed catching them.
I just try and make them fun. Just try and make them easy to understand. And if anyone ever has any, any ideas or feedback or want me to talk about something, I'm more than happy to. And I agree. I'd pick Microsoft over Zoom in the comments there.
Let's go. Thank you for coming on, John. We'll definitely have you back on. It was definitely a pleasure.
Mitch, such a pleasure. Thanks so much.